A common question that I get is whether an IRA is subject to Pennsylvania inheritance tax. And the answer is yes. An IRA, an individual retirement account, whether it passes by a beneficiary designation form or whether it passes into a trust or if it passes into the decedent's estate because there wasn't a beneficiary designation form set up, in any event, the IRA is subject to Pennsylvania inheritance tax. The only exception to this rule is if the decedent was 59 and a half or younger at the time of their death, in which case the entire IRA is exempt from Pennsylvania inheritance tax. And the other exception is if the IRA passes to a surviving spouse, because under Pennsylvania law, any asset passing to a surviving spouse is exempt from Pennsylvania inheritance tax. In any other case, the IRA will be subject to Pennsylvania inheritance tax, and the tax rate depends upon the relationship of the person who receives the IRA to the decedent. The reason I get this question a lot is because there's a lot of confusion, and I think that confusion comes from two places. Number one, people often think that because an IRA is generally set up to avoid probate, that it also avoids tax. This is not true. Just because an asset is a non-probate asset and does not have to pass through probate in order to be distributed to the named beneficiaries, it does not mean that the asset is exempt from Pennsylvania inheritance tax. I think the other cause for confusion is the income tax consequences of an IRA. Distributions from a traditional IRA are subject to federal income tax. Remember, these are tax-deferred accounts, so any money going into the account are pre-tax dollars. Any distributions that you're receiving from the IRA are subject to federal income tax, and that same rule applies for inherited IRA. So if you inherit an IRA, any distributions that you're taking from it are subject to federal income tax. Now, the saving grace here is under current regulations. We're currently in the third iteration of the Secure Act. There is a stretch period. So the income tax liability, not the inheritance tax liability, that's separate. Under Pennsylvania law, the inheritance tax on the account has to be paid within 9 months. But the income tax can be stretched out over a period of time. The general rule is that you have 10 years to make or to take distributions from the inherited IRA. There are exceptions to that, including a surviving spouse. They have a lifetime stretch. A disabled or chronically ill beneficiary has a lifetime stretch. There are some other exceptions. And so that is a topic for another video. But the good news is that the income tax on the entire account doesn't have to be paid in the year that the decedent died or the year after. It can be stretched out over a period of time. I hope that you found this video helpful. I hope that it answered some questions for you. If it generated new questions in your mind, let me know in the comments and I'll hope to answer those questions in future videos.